Known Tesla investor and future fund managing partner Gary Black has made a bold prediction that is getting people in the financial industry excited. He thinks that Tesla is about to have a massive 7x growth surge, which would be a game changer for the sector and give investors a once-in-a-lifetime chance. Are you excited to find out more about this exciting prediction and how it might affect the market? Then let's begin. Sit back and enjoy the video. Don't forget to hit the like button and follow. Gary Black thinks that Tesla stock could go up 7 times its current value. Even though Tesla is having problems, Black is still hopeful. Black says this is the only way for the price of Tesla stock to rise. It was said by Gary Black that Ron Barron thinks Tesla will be worth $4.5 trillion. Ron Barron's prediction that Tesla will be worth $4.5 trillion in 10 years is very close to the truth. Black thinks that 20 million cars will be sold with a profit margin of 30% on each. Multiplying $300 billion in operational income by 15 times the operating margin gives us $4.5 trillion. The first time Barron made his prediction was in November, when he told CNBC that if Tesla's value reached $4.5 trillion, it would be 570% higher than its present value in 2014. Barron put his first money into Tesla. His 4% share in the company is worth $4 billion. The investor thought that the company would be worth 4 trillion INR in 8 to 10 years, and that each share would be worth 500 to 600 INR in 2025. Elon Musk said on Tesla's Q3 2020 earnings call that the company might be even bigger than Apple. More than $4 trillion has been invested in Tesla by Saudi Arabian investors, who agreed with Musk. Barron's optimistic prediction is based on the idea that Tesla will continue to grow for another 10 years and sell 20 million cars every year. Elon Musk is the CEO of Tesla and plans to make 20 million cars by 2030. $1 trillion would be made and $300 billion would be saved if he sold 20 million cars at $50,000 each by 2030. Barron said they made $300 billion in running profit, which we multiply by 50 to get $4.5 trillion. The investor says that there is a better case than Tesla's. The investor also points out that Tesla's profitable self-driving car project is not included in the revenue. Investments include robots and batteries, but not robots themselves. We won't be seeing drivers in Tesla cars anytime soon because Musk thinks robots will be more important than cars. That's why Tesla is working on so many things at once. When Musk said that Tesla's value would be higher than Apple and Saudi Aramco combined, he forgot to mention the human in robot. Because of the robot, Tesla's stock price will go up. Gary Black's and Ron Barron's Tesla predictions were very close to each other. By 2030, Tesla will be worth $4.5 trillion, which is about what our parents said it would be, though we came up with that number on our own. Tesla's EVs are expected to earn $42 per share on the stock market based on a market cap of $30 billion, a PE of 30, and a compound annual growth rate of 15 for earnings per share. At $1,260 per share, this means that the company has a market cap of $4.5 trillion, and most Tesla investors are worried about this. There are more and more Tesla individual owners who are worried that the company's involvement with Twitter could hurt it. Future Fund LLC's $50 million in Tesla shares are managed by Gary Black. Tesla shares dropped by almost 6% in the middle of December and made a bit of a comeback in late January. Musk had a rough weekend on Twitter when he criticized people for giving their pronouns without being asked, attacked the company's former head of trust and safety, and talked about the arrest of a top U.S. government medical advisor, Anthony Fauci. Warren Buffett said that the market works like a vote machine in the short term, but like a scale in the long term. For example, the rise of Elon Musk's popularity in the long term hurt the Tesla brand. Martin Vita, who is in charge of investor relations, and Hiroshi Mizuno, who is on their board and has invested in Tesla for a long time. Roz Gerber wrote that she was worried about Tesla's board of directors and asked them to find out who is running the day-to-day business now that Musk has left to become CEO of another company. Gerber said that Tesla is doing well. He talked about how Tesla made money from Elon's ambitions and how the company needed a dedicated CEO. The stock price drop of $54.31 in December put Tesla on track for its worst year ever, but the price of that stock has since gone back up. Tesla owners have been on edge for months since Elon Musk bought Twitter at a time when Tesla stock was down 30%, and many people told the CEO to back out of the deal and focus on the electric vehicle manufacturer instead. The stock price kept going down after that, as investors worried about recession and inflation. Also, Tesla slowed down the rate at which it shipped cars after it bought Twitter in late October. Tesla stock fell by 28% in December. On December 13th, Musk said that Tesla would be great in the long run, but he couldn't change the big picture of the economy. "I will make sure that Twitter helps Tesla owners in the long run," he said, adding what was said about those plans. The week before, Elon Musk told shareholders that he was still working on Tesla and SpaceX, which used to be called Space Exploration Technologies Corporation. Musk tweeted over the weekend in July that he was still managing the Tesla line at SpaceX, but that the teams there were so good that he wasn't needed as much by 2030. Tesla is projected to have an EPS of $100, which means that a 30x multiple is in line with a 15% rise in earnings between 2030 and 2035. If the price was $3,600 in 2030, it would be worth $1,400. Before the stock market crashed in August, each Tesla share was worth $232. This makes sense when you think about EB. The price of company shares is about the same as it was before. But it's a lot less than the $232 it was worth in July. It's been trading above or below $200 in recent months. Black thinks that Tesla stock is worth less than it really is, and that the company should buy back some of its own shares because Black wrote to Tesla's board of directors, suggesting a way to spend some of the company's growing wealth. The company's price-to-profits ratio is at an all-time low, and the company has more cash on hand than ever before. According to Bull and institutional investor Gary Black, he suggests that Tesla buy back its own shares. When a company buys back its own shares, it basically adds another customer to the market. Black thinks that Tesla's board will decide to start a $10 billion share buyback program, with $5 billion being used to buy Musk shares right away. This would help Musk's finances at Twitter and lower the overhang on Tesla shares and purchases. Share prices would rise if Twitter were left to its own devices, which would be a problem for Elon Musk in any case. Black suggested a buyback after 3 years, saying that the company can easily afford a $10 billion buyback because it has $18.9 billion in cash and $100 billion in free cash that will be generated by earnings over the next 3 years. This includes all capital expenditures, which could reach $35 billion for new gigabit connections, Optimus Dojo, robotaxis, and other projects. Black wrote an open letter to Tesla-backed directors outlining his plan. The letter also says that he believes in Tesla's business, Tesla's product ideas, Tesla's goods, and Tesla's management. He says that Tesla is the biggest investment he has in his future fund. This is the end of our talk for today. If you want to hear more, click the like button below. Join now, check out our other movies, and I'll see you on the next one.